Hey, what's going on, guys? It's Will Homer here, back with another video. Taking a look at a couple different tickers, and I'm going to go ahead and start off with AMC here. Looking at a few different things, going about how I actually look into the charts and place some of my options trades, and just getting a broad idea of exactly what the stocks and potential tickers can actually do in the coming days and weeks. I'm going to start off with AMC here just to get an idea of where things are flowing. I just want to start off by also saying that I'm not a financial advisor. Pretty much anything I say is going to be based upon my own opinion and what I'm seeing based on movement. A lot of things have changed with the stock. The stock is a moving stock. Things happen. The way the sentiment has changed over the last few years, as well as what it looks like the institutions are trying to do in order to get full control out of retail investors' hands. It's painting itself. It's painting a picture in the chart here. And what I'm noticing, pretty much based upon the volume profile and the way things are moving on a downward slope while being accumulated heavily by institutions, it's really just all showing itself on a larger time frame. And we can actually even see it now as things are increasing and things are getting better for the company. The FUD, the articles, the reasons for retail investors to drop their shares are just getting more and more prevalent. Whether or not it's Amazon looking to buy the company, whether or not it's Apple investing billions of dollars into the idea of the movie industry, just whatever the case is, it just looks and appears that there is a bigger agenda than what we're able to see or what we're hearing based upon just on social media. So again, I look at the charts. The charts are really what dictate how I move and what plays I take, what plays I stay in, and so on and so forth. But AMC is one of the toughest ones that I've seen in a long time. The way it's been manipulated, the way it's been moved around and pushed, it's really interesting. I mean, even up to the point where the halts have dictated everything that we've done, or everything that we've gone through, or even thrown off everything we've gone through within the past 2 years, on every single occasion. All right, just a broad stroke here. Looking at the weekly time frame, I actually was able to chart out that we are in a bullish trend overall, time-wise. It's an uptrend that's being formed here based upon these white lines that I have in place. It's an uptrend ever since the inception of AMC. It's dropped down and it's formed one of my favorite patterns, which is the descending broadening wedge and a midline. It has respected that midline ever since the time of its initial drop. Purple as the base. You can see a spring action take place here where volume comes in heavily, which is the bottom right before the January 21 squeeze. All right. There was an uptrend that was established before back in 2020, earlier in 2020. Bounced off of it as a double bottom. Squeeze happened. Alrighty. The uptrend was broken. A new form of support was created, which actually coincides with where we are now, which we've also sprung out recently. As we cross the midline of that descending broadening wedge on the macro weekly chart, you can see the volume poured in, picked up, and we got a squeeze. Now that's obviously related to more than just the idea for what the chart looked like, but it did help move this thing along, as well as the idea for the retail investor sentiment at that time, also in the bull market at that time, as well as whatever the option chain was looking like at that moment. Obviously, GameStop had a lot to do with this. They were tightly linked together, as we can see now on most of the charts from that time to now. But nonetheless, it ran up, broke the descending broadening wedge on the weekly, which is the yellow downtrend line, found support on it, and proceeded to press up for the June squeeze that we had. Now, take another look at this thing here. We understand that we also can understand that we have a point of control that has been established ever since that time frame. We have a midline, a point of control. Point of control right now is looking like around the $5 and change mark. I have it set as $5.13. You may have it varying in different locations, but basically $5.13 to the $5.16 mark for me is pretty much where the price tends to return to, no matter where it is on the chart, based upon the trend that's been set up. The weekly is pretty much showing, volume-wise, increasing demand, contracting supply all the way throughout the range. It's much more easy to see on the higher volume locations. You can see that we already have set up our moving average on the volume profile. Excuse me, the volume standard volume here at the bottom, and you can see that the green obviously is showing more signs of life than the red does, even though it doesn't feel like it when we're in the play. The supply has diminished substantially. All right, I'm gonna move down to a smaller time frame just to get an idea of what that looks like. We're gonna use the 3-day time frame. This is pretty much indicating that this thing is being accumulated. Somebody wants retail out, and someone else wants to take over. Obviously, institutions do. As you can see, we've been in the downtrend since that for the last 2 years, ever since the June 21 run, which again was nothing more than a push-up, buy button removal took place, a retest of the descending broadening wedge on the macro, which is when I say macro, I'm talking about the weekly, and then from there, a breakthrough of the midline of the larger bull channel, which ran up and started a new descending broadening wedge, which we're currently in, and obviously have come to about the end of it, leading into the uptrend from the macro, which is this green line. Now, so originally coming up to a more recent time period here, as every single time we've touched the top of this descending broadening wedge, we've experienced halts, which tells us a lot of different things, that this does want to run, and somebody doesn't want it to run. What can we do about it? Really not much. But all we know, we can definitely keep note of it, understand that it's a possibility that these things can happen again, and just pay attention to the volume. It will have its time, but we just have to stick with it if we're going to be really part of the play and be convicted in it. That's really what it's all about, is having conviction in your play and being able to set it and forget it. The reason I do what I do, and the reason I'm into trying to share whatever knowledge I have on options and other plays that we take, is because of the fact that this is not the only stock that's out there. We want to make sure we take advantage of opportunities that are out there, and if we do really believe in this particular stock, we can then take whatever gains and whatever knowledge we have on different tickers that are out there, and then actually pour back into this one if we'd like to, and look to exit at the highs. Options are also available. This is a manipulated stock, so you have to be very careful with it. There's a lot of changes happening with it as well, including the idea for the stock split and so on and so forth. But the idea is the same. If you believe in it, you'll stick with it regardless of how much time it takes to make it happen. So back to the idea for what's happening with the uptrend on the weekly. You can see that we, just like we did in January, it broke its recent lows on that uptrend that it was forming from the lows of the stock at that time, which was around $1.20, $1.21. It broke through, and that's when you got the influx of volume. Very similarly, this is mostly what people are talking about that believe in the fractal theory. We have also done the exact same thing with the news that's occurred with the Allegheny lawsuit, as well as whether or not it was going to go through or not, or the settlement. We did actually drop below the uptrend that was created, the last uptrend that was created since the pre-squeeze area of January 21. Volume is starting to pick up. We are now above the average line, the moving average for volume, stepping up slowly with green buy volume. There's going to be most likely there's going to be more continuation of the same. This is based on what I can see. However, we're going to most likely retest the break back into this wedge. I'm going to move closer in on the daily chart just to get a better look at it. You can see that huge gap down off of the initial news, and it popped right back into that same range after the news release on the denial from the court. So now we're really pretty much right back in the same place that we left off and getting ready to push. As you can see, my yellow line is still the top end of the downtrend of the descending broadening wedge that we're in at this point. I want to add a midline real quick just so you guys can take a look at it and also be aware of where it lands. Midline, basically, I usually just run a line that is respected throughout a range. Let's see here. Throughout the range here, it looks like this is the area that's respected the most. And believe it or not, looking at it for a second time, we're actually outside of. We actually bounced right on that line. So we are still, believe it or not, this is in log scale now. Log scale is just a different way to take a look at the markets. Typically, most apps, it automatically comes in linear form. This is going to be in log scale, which is used by, I'd say, much more experienced traders, but it lets you see a different beat on things. All right. And taking a look here, that bounce actually occurred right at the midline of the descending broadening wedge that you have on the daily chart. So the bounce occurred. We bounced back into the same range, respecting the uptrend from pre-January squeeze. Now making our way back upward. The top of this channel is somewhere around the $7 mark if we line it up with the May 2021 earnings report. Excuse me, the May 2023 earnings report. I'm just going to put a line here just to kind of mark it off. All right, and we're taking a look here. Broadening top simply shows us what's been happening ever since we've had this most recent run. Alrighty, and it's gonna get a little closer now. We're gonna move over into the 4-hour time frame just to get a cleaner look at this whole thing. And I'm gonna remove extended hours. It's gonna go right into regular trading hours only. Okay. Now you can see on I've explained in past videos and other videos, or also on my Twitter handle, that we have this particular pattern, a wedge that's getting broader and wider as it goes through. It's called a broadening top pattern, where you usually have an A, B, C, D, and E setup. We gap filled. I didn't want to break initially. I didn't want to break the 406 mark, which was a gap that was created before the run up when we got the news of the split. So 406 was actually what I wanted to be the bottom, because I was actually not a fan of breaking this uptrend that we've been building for the last 2 years. Was it necessary? We can't tell, but what it does look like it did is that it did influence volume to come back into play at that touch. And you can see it hit the midline of the descending broadening wedge, and then popped right back up into place, which gave us nice influx of volume, which anybody who had calls this past week, following that news and going into the news of the denial, you made a huge bag on those calls. A lot of us got shaken out, myself included, at the beginning of the week when they first dropped the news on us that the Allegheny situation was in place. And I'm pretty sure that based upon this schematic is that once we actually do break this 516, 513 level, what we're going to run into is going to be some more chop around the $6 mark, which is about the midline of this is the midline here roughly of this channel, or of this this broadening top pattern. So we can expect to see a little bit of chop right there, right in the midline, and then from there, our biggest issue is going to be right around the $7 and let's see, around the $7 mark, between $7, which is again the downtrend of the descending broadening wedge. Roughly every time we've broken this wedge, we've been halted, or there's been something that took place where we were knocked right back down, and pretty heavily. There is argument still. I know this online on Twitter and things like that. There's still argument out there that this can potentially run down to the $2, $1 mark. It's not. I don't think it's off the table. It's still not off the table. Typically, when we get those types of rejections or halts, obviously it's the death of the meme stock at that point in time. High volume hammer candles or high volume shooting star candles will knock us usually back down for weeks, even months at a time. And we've had hell pretty much trying to come back and regain strength before we can get the next push. I would hope for this time to be different based upon the volume profile. You can see we're still in an accumulation. You can see that we still are in a situation where this thing does want to move through. We have a little bit of a catalyst coming up with the end of the month. I want to go and make sure I add another line here just for the time frame that we're expecting the reverse split to go through, which is roughly around the 27th, I believe. I'm going to add it for one more day, put the 28th. And then following that, we have the earnings. So there's going to be a huge influx of volume, most likely going into that time frame. I'd be very careful with calls going through because I'm not exactly sure how these calls that are held are going to be handled, whether or not they're going to dissolve them, whether or not they'll lose value, or whatever the case is. So if you're going to trade options on AMC in the next couple of days or so, next couple of weeks, I'd be in and out as fast as possible if you can. I wouldn't hold anything going into the split because we're not exactly sure how that's going to take place with a cusp number change and things like that. But I can't tell you what to do. So please make your own decision exactly how you would like to handle that when the time comes. But again, we're still playing along with the pattern. The pattern's still here. I say the pattern, I'm speaking of this broadening top. We did, again, break below where I wanted to go. We did touch the bottom of that trend line, and we are now back in place. If, again, we do get a little bit of a retracement, I can see this going as low as about the 471 mark, and as low as 440. Just based off trends. We're not looking at anything else, no other indicators, just trends and volume. All right, so 440 is what I can see between 470 and 440, and somewhere in that range before we bounce. Most likely, if I can catch it and I can see this, most likely a lot of other traders will see this, and then volume will act accordingly until it moves around. If for whatever reasons, on the bear case scenario, we do break this trend line, I'd expect us to go down to around 370 and lower, most likely setting a new low. It is a high possibility if we continue to play this pattern, we can see as low as 350. If 350 occurs, then at that point we'll expect a huge move back upwards, another influx of volume, which would lower our chances of actually breaking into the double-digit number. Now, I know this is a very emotional play. A lot of people have been stuck in this thing and they've been holding their shares and whatever the case may be. But it is a tough one to hold on to. What I'd say is I expect more of a move, a larger move once this whole setup is actually done. I expect a larger move more so into the end of the year. I'm going to go back out to the one-day chart here. Now, the reason I say this is that if we go back to the one-day chart, we go back to the weekly chart, I would say that we continue to follow this uptrend. And the uptrend will show us that once we break through and we find support up here at the midline of the larger bull channel that we created, I'd be more inclined to see us be in the teens, if not higher, by roughly about October of this year. I know that may be a little bit different than what a lot of people are actually saying, but that's what I can actually see as the way this chart is developing out for me, the way I see it. The downtrend by June, July should be completely broken. I don't see us making a new low. If we don't make the new low now, I don't see us making a new low for quite some time. And that when I say now, I'm talking about hitting the bottom of this trend line. Again, the 320 mark, somewhere around there. As you can see, it's a huge falling wedge on the weekly. And if we don't do that in this time frame. I don't see that happening for quite a while the company's starting to strengthen, get better, new movies and things like that coming out. There's new revenue streams, and so on and so forth. I see this thing continuing to move up, but once it breaks this area and bet back into the 2 digits, I don't see an issue with it continuing to move up, most likely hitting all-time highs somewhere in October, maybe even into November. But in that time frame is where I can see things happening for this particular stock. Not right now. Can we get a nice impulse move upward before that? It is very possible. However, it's a shot in the dark unless we get some really big news or something huge actually happens. I actually don't think that the reverse split is going to be enough to move it that much, being that we're in a situation where the stock is kind of in a situation where it's iffy, and we have the broader market to be concerned with. As long as the broader market is a concern, it's a possibility that this will take a lot longer than we'd like it to. If things do start to turn around, I could see this thing moving a lot sooner. But we are in a stage right now on the rest of the market where I would say a huge capitulation event is going to be coming up within a little bit, most likely into the summer, and that most likely would take this along with it. So I think this is very well planned. It was very well timed by the market makers, by the institutions, and so on and so forth, was to get us in place where the stock is actually absorbed by retail investors buying it, and then eventually just literally, causing us to carry the bag during the hard times before they potentially reach back in. They knew that this is going to be the case, that they're going to hold the ball until the clock runs out, so to speak, having us deal with the market crash. So in time, it will go back up to all-time highs. I do see that happening. It's just a matter of when and how long this is going to take. Now, a lot of different tickers and things like that, in my opinion, are really looking really bullish. But that is also what happens before a major capitulation event happens. I've been calling out the SPY going to 430 now for months, and it looks like we're going to be making that round very soon. But I don't see it going much higher than that before everything comes down, and that will take mostly about a couple of months at most. I have my longer dated calls on the SPY, have my longer dated calls on AMC. But I don't plan to hold them. Like I mentioned before, I don't plan to hold these things into the end of the month, because of the fact that I don't know exactly how it's going to play out with those options. I know that to control this movement, they're going to dump the entire market on this stock, and hope to scare people out. But it's part of the process. Just have to be patient. If we really believe in the play, really believe in what's going to be happening with this thing, we have to have our convictions about it. But at that point, you can see I have this, what was also created. Not only do you have the broadening wedge, you also have a channel that we talked about that's been created. The white lines I have on the top and bottom with the midline, a descending wedge, a descending broadening wedge, and also a bull channel that's formed. So there's a convergence of all of those things here, roughly around the July mark. You can see it here. There's a convergence of all of it here. Now, later on down the line, there is also the downwards channel, or downwards falling wedge that has its peak all the way in May of 2024. I don't believe that we'll actually hit that. However, I'm more inclined to believe that we're going to hit this area here and start to make our rounds back up towards the double digits area a lot sooner than later. But once we get into this area, we clear $10, $11, or $12, we start to move into new territory on the top end here, potentially having new highs. And if my my ideas are correct, I would have a price target on this thing somewhere in October, not including the split. Let's say we did the end of October, I'd be somewhere at this range, which would be about $60, which is a new all-time high. This larger bull channel, if we find support here, things continue to get better in the They tend to get better in the market. They also tend to get better at the box office and so on. And the plans for popcorn and the plans for the credit card and everything that's going on with a particular stock actually go into play. Profitability is around the corner. If done correctly with this reverse stock split, volume will start coming back in. We shouldn't have much of an issue. Now there are some areas to also be mindful of that we're looking at this one from one perspective, which is the downslopes. And I noticed with them AMC, a lot of things are not very linear in this particular stock. Most stocks you can actually see pretty much a linear setup on a lot of different things. What I mean by that is there's a lot of supports and resistance kind of stacked on top of each other. AMC loves to have these angular or diagonal resistances that we hit. Every time we hit a new low or a new high, a new diagonal support and resistance gets created, which causes a lot more time for it to be broken, and it's respected all the way up or down in some cases, which is again why we have this complete falling wedge pattern and falling resistances and falling patterns that we have on this particular stock. Same thing applies on the opposite direction. On the upwards, we're going to run into some resistance going upwards, and from a macro sense, we're going to most likely see that occur on a couple different areas. $16 is going to be a big one based upon the uptrend that we have here. $16, $20 is going to be a big one. These areas all have to be hit. I'll show you another one here. They all have to be hit. They're all going to be respected somewhere. Here's another one, $16.50. Okay. Here is another one. Maybe I'll fix that. Yeah, $43. And we're going to we have to stair step our way through all of this in order for us to be in a position where we start to hit those the highs. Now, the longer this takes, based on just volume analysis and things like that, the longer this takes to move, the higher up, as you can see with the uptrend, the higher up we can actually take this thing. It's an accumulation pattern. The longer they push this or hold it down, the harder it's going to move, the higher it's going to move. So just be mindful of that. If you are in this thing for the long haul, just have an idea where we're going to be taking this thing or where it's going to go. As long as the company continue to move towards profitability again, who knows? You might have the idea for a dividend being given out, which automatically will squeeze out the shorts. Hopefully that might be the case. That's pretty much one of the surefire ways to get shorts out of position is to be profitable and issue a dividend. Right now, obviously, they can't do that, being that they are carrying debt. But debt is a part of business. It's not an end all be all of a business at all. I know a lot of people that follow me are looking for opportunities, and let's see what we can get. Now, again, going into the stock split, I would be inclined to take a longer dated contracts. Most likely looking somewhere around the 28th. I wouldn't particularly want to do anything before that. Reason being is the monthlies can be a little bit, how did I say this, manipulated. I guess it's as simple as I can put it. Playing around with the different dates, this is the monthly. OPEX has been actually a big location where a lot of the contracts expire. And you notice that there's a lot more volume coming in around those times. So just to kind of to be in a position to somewhat secure the investment without being in a position where things change on you, I would most likely go a little bit further out, just until the 28th. Play it short term and closer money strikes. Again, I don't foresee this bouncing just yet. This looks like another reaccumulation is going to happen down to about the 440, 470 mark before it turns back around quickly. to get a little bit more liquidity and jump through the 515, 516 range, which is where we bumped our head last time around. But once we do that, we can start heading towards the 575 mark, and most likely we'll run into a little bit of issue in between 7, about the high sixes. So it looks around $6.80 to $7. Most likely, I think we'd probably get a halt right at that line. I was only shocked one time that we didn't touch this line, that we didn't get halted, which was highly odd. But most likely, we're going to experience some form of a halt around here. Now, there's a lot more to this. You know, there are the idea of the creek. There's the idea of the creek. There's the idea of the different indicators that will come up. But this is just, again, a broad stroke that I'm using on the weekly, the monthly, the daily, also, as well as the 4-hour and hour time frame, just to get a better idea of positions, where this thing can go in the long term, where it's going to stand, where we have to actually fight through in the short term, and some potential options, strategies, and things like that. You can actually pick up some options contracts. Again, I'd be considering somewhere around the $5 to $6 contracts for the 28th or so myself, and just take it from there, because I do see us running into a lot of issue right here before the OPEC states come up, which is roughly around that $6.80 to $7 mark, before potentially pushing up after that. Beforehand, it's anybody's call. I know the market is in an uptrend right now, but we don't know exactly how long that'll last. And I know they would love to slam this thing all the way back down to around 320 very quickly. So it's very possible, if we do get rejected here, if there's a halt here, everything turns around and this whole thing falls right back down to the threes, looking to play the bottom end of this broadening wedge pattern, which also is the bottom end of the larger falling wedge. And yeah, it can get really sticky before it gets better. So let's keep that in mind. So I'm just gonna go ahead and wrap this video up. I'm gonna be putting other videos in regards to AMC, not to mention some other tickers as well, other ones that actually might pique anyone's interest. With the SPY, Tesla. I also look over Ape as well at some point in time. These videos can be a little long-winded because I'm trying to do a broad stroke and cover a lot of different ground. The things that I haven't talked about in the past, besides outside of this regular post. But I want to do this more consistently, more frequently, just to kind of connect with everyone, give an idea of what I think and what I see on the market, and put some opportunities out there. What I can expect in the short term is just building community around this thing, getting a little bit more precise with this, getting better at it. So I appreciate you sticking with me and understanding that I'm doing the best that I can. I would like to do as much as I can to help the community, because I know a lot of folks are down with, like I mentioned before, and show some other ways to make money in the short term in order to invest back into your favorite stocks. So without further ado, we'll catch you next time on the next video. I'll be going more in depth on a couple of different indicators that I use, as well as other things that I'm seeing in different tickers and things like that too. So catch you later.